You know that feeling. You enter a trade, and within minutes price comes for your stop like it has a personal vendetta. Takes you out, and then, of course, reverses and runs exactly where you said it would. And you're sitting there thinking, somebody saw my stop. Somebody hunted me. I get why it feels that way. It feels that way to everybody. But here's the truth. The market wasn't built to take your money. It was built to do three jobs. Three boring mechanical jobs. And once you know what they are, something shifts. You stop taking losses personal because you finally see what's actually happening behind the glass. So here it is. Markets exist for three reasons. They move risk between people. They move money to where it's needed. And they make it easy to get in and out. That's the word liquidity you keep hearing. That's the whole machine. Not a casino, not a battlefield, a service. And every single candle you'll ever look at is just the exhaust coming off those three jobs running nonstop. So let's walk through each one. Risk transfer, capital, and liquidity. By the end, you'll know exactly why price even exists. And you'll understand why nobody, and I mean nobody, is hunting you. First job. Markets move risk from people who don't want it to people who'll carry it. For a price. Picture a farmer. He's got a field of corn and one giant problem. He has no idea what corn sells for in 6 months. That uncertainty could ruin him. So he walks into the futures market and locks in a price today. He just handed his risk to a trader, someone who's happy to carry that uncertainty because there's money in carrying it. The farmer bought certainty. The trader bought opportunity. Both walked away with exactly what they wanted. That's not gambling. That's literally why futures markets were invented. But think about it. Moving risk around only works if money can actually flow to where it's needed, which is job 2. Second job. Markets move money toward opportunity, like water flowing downhill. A company needs cash to build something, so it sells shares. People with cash want that growth, so they buy them. Neither side knows the other. Neither side has to. The market is the meeting point where the money finds the mission. And here's the part that matters for you as a trader. That flow never stops. Money is constantly rushing toward opportunity and running from danger. When you watch price move on your screen, that's the flow you're watching. Not magic, money moving. Quick one. When you do start trading, the fastest way to stop taking losses personal is seeing them on paper. Because on paper, losses stop being pain and start being patterns. That's what Funded View is for. A free journal that turns your trades into patterns you can actually read. Linked below. All right, last job. And this one's the one traders care about most. Third job. Markets make it easy to get in and out. That's liquidity. Think about what you'd do without it. You want to sell a position. Congratulations. You're now knocking on doors like you're selling a used car. Finding a buyer, haggling, waiting weeks. The market deletes all of that. You click, and somewhere on the planet, a counterparty appears instantly. Now lock this word in because you're going to hear it for the rest of this series. Liquidity just means where the orders are, where business can get done. That's it. Every time some guru says liquidity like it's a secret code, that's all they're saying. The market pulls the whole world into one room, so business happens in milliseconds. That's the service. So now connect it all. The market is a machine doing three jobs. Moving risk, moving money, keeping everything liquid. Which means when your stop gets hit, here's what actually happened. Orders found orders. The machine did its job. Your stop was just sitting where a lot of business was about to get done. It's not personal. It never was. The machine doesn't even know you exist. And that realization changes everything because you can't out-angry a machine. You can only study it. The traders who make it stopped fighting the machine and started learning how it moves. That's the shift. Quick recap. 3 truths. 1. Markets move risk to whoever will carry it. 2. Markets move money toward opportunity. 3. Markets provide liquidity. Easy in, easy out. The market is a machine, not an opponent. Machines don't hold grudges. So the machine exists to do business. But now turn the camera around because here's the uncomfortable question. When you click buy, what exactly are you doing? Trading, investing, or straight up gambling with charts open? Most people are 100% sure they know. And most of them are wrong. There's a one-question test that settles it instantly, and that's the next lesson. If this series is clicking, subscribe. We're going 0 to funded, in order. Lesson 3 is right here, and Funded View is where you'll track your trades once you start taking them. Free, linked below. Catch you in the next one.